Hi, this is Mike Swanson here. As you know, I just sent you an update the other day where I was very bullish on the stock market. I've been bullish on the stock market for months, holding my positions and making money as the market goes up. And one of the sectors I've been most invested in are gold stocks. They've been going up like gangbusters. But the thing is, during this time that I've been in the gold stocks, there have been bearish people all over CNBC calling tops in gold and bottoms in the dollar over and over again, and also people on the internet who've gotten a lot of attention in the past couple months doing this again, and they just did it. Someone got a lot of attention doing it the other day. So I want to show you how you can really pick a top in gold and therefore stop listening to people doing it too early and maybe scaring you out of your positions or keeping you away from the gold market. So anyway, the key is you cannot guess tops and bottoms in the stock market, in the gold market, in the dollar based on ideology, because there's some people just hate gold or they just have these basic assumptions that the dollar has to go up because we're going to crash, the stock market's going to crash, or this and that's going to happen, and they're not basing it on what the market's doing. Or else they claim they have these systems that present targets of where things have to top out or have to bottom. For example, there were people using what they claim was Elliot wave theory back in the fall, saying that the dollar had to bottom at $78. And of course that didn't happen, and showing their whole presumptions were wrong. But that doesn't stop people from doing this sort of thing. And you can't make money in the financial markets thinking like that. You've got to look at historical trends, current trends, and understand how trends develop and how you can spot trends in the market. And therefore spot turning points. Well, actually I put 3 ways, but really I just want to talk with you about 2 ways to identify turning points in gold and the dollar. First of all, there's divergences between the dollar and gold that form important market turning points, and gold itself has a tendency to form climatic tops that you can identify easily with one simple technical indicator. Anyway, let's talk about gold and the dollar. Gold tends to lead the dollar in an opposite direction. What this means is that, as you know, when the dollar goes down, gold tends to go up. Well, the thing is, gold tends to start its trend before the dollar does. What this means is that gold, over historically the past 30 years, when the gold is going up and the dollar is going down, gold tends to make a top before the dollar bottoms. And this is something we haven't seen in the past couple months. And that's one reason why all the people who've been calling bottoms in the dollar the past couple months have been wrong. And they're going to continue to be wrong until gold makes a peak. And in this chart, I'm going to show you right there, the last time there was a major top in gold and major bottom in the dollar was in 2004, right after the election of George Bush. For whatever reason, traders thought the Bush election was bearish for the dollar because he was going to increase the deficit. Lord knows what they think of Obama nowadays. But as a result of these thoughts about Bush, people were selling the dollar into the election and buying gold into the election. And gold peaked before the dollar bottomed out. And that change in relationship between the two signaled an important turning point, and it brought a correction in gold and a subsequent over 10% rally in the dollar over the next couple months. And gold didn't start a new bull phase for almost another year. And now, of course, gold is going up, acting much stronger, going up faster than the dollar is dropping, and that tells you that we're not close to a bottom of the dollar or a top in gold. And the next thing gold has tended to do when it tops out is have a climatic top. It doesn't simply just, trade sideways for a little bit and roll over. Instead, it tends to have a blow-off top. And this is fairly typical of commodities in general. If you think back to 2007, we saw a climatic blow-off top in the price of oil, where oil shot up over $90 up to like $150 or so in just a matter of weeks. Now here in 2006 we had a climatic blow-off top in gold. In 2008 we had a climatic blow-off in gold. 2004 we had a little bit of a climatic blow-off in gold, and that was the last top I showed you. Although it's hard to see that in this chart because these moves in gold here that were big at the time have been dwarfed because of the way gold has gone up so much farther. But anyway, an indicator I follow to look at the volatility are the 200-day Bollinger Bands. And the Bollinger Bands tend to expand and get far apart from each other during these climatic blow-off phases, and they actually get narrow and tighten up before gold breaks out and begins one of these big bull runs. And as you can see here, they tightened and they start expand as the bull run started. Boom, they consolidated for a year. The Bollinger Bands tightened, boom, a new run. And the same thing just happened over the summer. The Bollinger Bands tightened, and now they're starting to expand. But the key word is starting, and they haven't reached the point where they're as far apart as they get when you get a climatic top. And it's going to take them several months to get there. The indicator in the bottom measures the width between the Bollinger Bands. You can see how it expanded in 2006, expanded in 2008. It's only starting to expand here. Again, what this means is we're not near a climatic blow-off top in gold, even though gold's been going up at times 30 points in a single day. On a percentage basis, it's not an extreme move because gold is valued over $1,100 an ounce now. Okay, some conclusions you need to take from this. This gold rally is only a few months more. It has more to go. If gold runs in peaks like it did during its last two big rallies, it will go to $1,300 to $1,400 an ounce within the next 5 months. Let me repeat that to you. If gold runs in peaks like it did during its last two big rallies, it will go to $1,300 to $1,400 an ounce within the next 5 months, and you're going to see the climatic blow-off phase probably be a 100 to 200 point move within just a matter of weeks. The gold doubters are completely wrong. If you're long gold stocks, don't get scared out of your positions. If you're not long gold stocks, buy on dips. And enjoy this move while it goes on, and I'll be talking to you later.